talking about energy, one of the most important commodities for all sectors of the economy, with our next guest, Bob Ryan. He is the founder of Ryan Commodity Insights, and we'll be going not just recent news, but also his outlook for 2025 overall. Welcome to the show. Welcome back, Ryan. Happy New Year, Bob, and thank you for being here. Congrats on your new venture. People should check
Thank
out
you.
Ryan Commodity Insights, link down below. Bob, let's start off with recent research that you've done and you showed me offline, and let's just set the stage for what we're expecting in 2025. You've compiled for the audience here a chart showing the global policy uncertainty index. Tell us what you found and why this is significant that it's so high right now.
Thanks again for having me. I really appreciate it. As we were discussing, the implied volatility in the options markets is pretty tame. It hasn't, been acting out at all toward the end of last year and the beginning of this year. And in fact, toward the end of the year, it was actually below average. And here you had all this uncertainty going around in the world, elections all over the place, including in the US. The NATO, some of the more important NATO democracies like Germany and France, and some other allies of the West like Korea, had their governments were in a state of complete disarray. The German and the French governments collapsed, and they're in the process now of trying to rebuild, a new government structure. So you would think that, options markets would be a little bit better bid, meaning the implied volatilities would be higher, but they weren't. But what you do see is very high levels of global economic policy uncertainty, as you mentioned. And there's a reason for that. People will say, well, if uncertainty is high, why isn't volatility high? Volatility is something you can measure. It's the standard deviation of returns. Uncertainty is something you cannot measure. You have two types. You have the known unknowns and the unknown unknowns that make up what we refer to as uncertainty. And we don't know what we don't know, and we don't see far enough into the future to be able to discount events that could happen. But the market is still very much on edge, and because of that, there's an aversion to taking, positioning risk in a lot of these markets, and there's a flight to safe havens. So you've seen gold remaining very well bid. You've seen, some of these commodities, softening some, crude oil being one of them, partly on the back of a higher dollar, which is also a safe haven. When things start to get really uncertain, people have a tendency to go for gold and for US dollars as safe haven assets. Both of those have been very well bid. And it's a very unusual thing to see gold and the US dollar moving in the same direction, but we're in a regime shift. And we've been in this shift since the post-pandemic period, where you do see this co-movement between those commodities. That's what we're seeing right now. The real exchange rate, or the real effective exchange rate of the U.S. dollar, it's a mouthful. It's a series put out by the Bank for International Settlements. Was hitting record highs toward the end of last year, and that's highly unusual, to see that occurring and gold to be bid, continue to be bid, and within 5% of its all-time high of close to $2,800 an ounce. So, we're living in some remarkable times, and there's a lot of stuff that still has to be determined yet.
This policy uncertainty, what is that a reflection of? Just unknowns about the conditions of the world, basically post inauguration. I mean, I thought that Trump's plans were pretty much well mapped out already, but I'll let you comment on that.
Yeah, he said that he's going to impose tariffs on China like 60% right away. He's going to impose tariffs on Mexico. might even get into your backyard, imposing tariffs on Canada.
Yeah.
That's all in the news. He's also threatened to impose tariffs
Well,
on
are the markets just
EU.
not believing this rhetoric right now? Because if he said these things and made it very clear what he wants to do, why is there still so much uncertainty?
It's not clear. There's been some apparent, you know, um, I don't know, something of a strategy playing out right now. Trump is out there playing the bad cop, and then some of these other guys that appear to, be on the same page as him, but they're out there performing the role of explaining what he intends to do with tariffs. And the new Treasury Secretary, Besser, whatever, I can't
That's it.
remember his
Yeah.
name right now. Yeah, was saying, well, this could be a tactic, to threaten to use tariffs and, expect the people that they're going to be directed at to, fall in line. Like, in the case of Mexico, stop the immigration flows, stop the fentanyl flows. In the case of the, Chinese, stop, exporting everything out that you can to the U.S. Until the trade balance, gets more in line. The problem there is that, ever since Trump's last presidency, China and the U.S. have significantly reduced their bilateral trade. So there's not a lot that, Trump can do against China right now. That's really truly going to be meaningful. But on top of all that, none of what he said has got a real plan attached to it yet. I mean, he's threatening these things. He's pounding the table, he's pointing at people, but there's no detail around the economic policies he's thinking about, particularly these tariffs, and the pressure he's going to be putting on the Fed to maintain a more accommodative policy. I mean, all these things are being hinted at or being discussed without any detail.
Well, let's take a look at what the energy markets are pricing. And what I want to come back to the Trump and China dynamics in just a bit because you brought up some key points about why China may not be affected as much by these tariffs. Let's take a look at what the oil price has done. Just shot up in a straight line ever since Christmas. I mean, the move is not that substantial, but if you take a look at the last couple of months now, this is the first significant rise in price basically since October. What's happening right now?
Mhm. The OPEC Plus producers, led by Saudi, have agreed to postpone the return of barrels to the market until April of this year. Before it was going to be March. But then they also extended the period over which they would return the barrels that have been held off the market, which amount to about close to 6 million. I think it's like 5.85 million barrels a day of production is being withheld from the market.
Hmm.
And instead of trying to return that over the course of 1 year, they've agreed to return it over the course of 2 years, ending at the end of 26. So the net effect of that is going to be that you'll still have some, production increases outside of that OPEC plus group. But, the fact that you're keeping close to 6 million barrels a day off the market means that refiners, particularly if they see surges in demand like we're seeing now for heating oil in the northeast of the US and gas oil in Europe, um, as they draw those crude oil barrels down to refine those into heating fuels and just uh, transport fuels and those sorts of things. Inventories are going to go down, and because the supply is being withheld from the market, the rate at which the inventories fall is more than likely going to increase. And what that's going to do is give you a more backwardated market. So the front of the curve is going to continue to trade above the back of the curve, indicating that the market is tightening. And we've seen that, and we expect to continue to see that going into this year, particularly if the U.S. Continues to grow and China and the EU respond to some very weak economic performances with more rate cuts, trying to stimulate their economies. There was a report today that China is looking at adding some stimulus to, packages that it announced toward the end of last year. And so we'll see. China's PMIs were weak. Their, consumer spending is very weak. The EU is in terrible shape. The UK is weak. I mean, the UK has been flat to slightly negative growth for the past 2 quarters, which technically puts them in a recession. So these guys are not all going to stand around and wait for their economies to continue to you know crumble. They're going to start intervening in the market, and more than likely we'll start seeing a more aggressive ECB and a more aggressive PBOC, in addition to more fiscal coming out of China. That'll all be good for commodity demand going into next year if they're able to pull it off. It's not clear that they have the expertise to actually do fiscal policy that matters in China.
I just wanted to get your take on why the move happened right before the inauguration. I've talked to several energy experts. The consensus amongst people I've discussed with the topic with so far, Bob, is that Trump's policies are bearish for oil. And I'll ask you if you agree with that. Part of it comes from the fact that Scott Bessent wants to add an additional 3 million barrels of oil per day. Um, and of course, we know that fracking has a lower cost of production than some other countries. So the U.S. in theory could withstand lower prices. Do you agree that policies are indeed bearish and we'll see more bearishness in the market?
If he was able to do anything to make those policies effective, to actually be implemented, that would be bearish. But the fact of the matter is, the U.S. government is not an oil producer. The oil companies in the U.S. that Trump is talking to are all privately held. Their first priority is taking care of their shareholders. They've done a
Yes.
remarkably good job of managing their production so as not to collapse the market. And they're, doing pretty much the same thing OPEC Plus is doing.
That's a
So,
great point. I mean,
um,
if you were the government, if you were in Trump's office, working for the Treasury, for example, or in Scott Bessent's office, how would you incentivize these private companies to comply or cooperate? I think would be a better word, with your policies. I mean, you're right; they have to take care of their shareholders. A lower oil price doesn't really benefit them in the short run.
yeah. I don't know what he can do without blowing up the budget even more than it would be if he's, successful in reducing taxes or keeping tax rates low. Um, you know, and it would be a Pyrrhic victory if, he were to, change the tax structure, change the write-off schedules, for these oil and gas companies, in order to achieve higher output, in a market where outside the U.S., demand is having a hard time reviving in the other two largest economies in the world, the EU and China. Um, you know, EM generally, the rate of growth outside of China in EM is actually stronger than it is in China right now, and that's led by India. So, but that's also under threat because the dollar is so strong. There will come a point where the oil is denominated in dollars, except for the stuff that Russia sells into India. They do. I think they have currency, ruble and rupee transactions, and that was a trade deal that went back all the way to the 1950s. But yeah, I don't see how he can implement it, David. Really, tell you the truth. He can pound on the table, but
Hmm.
Chevron announced that they're cutting back their capex, because they couldn't make it work, to increase production and still keep shareholders receiving the returns they've come to expect.
So what then is your outlook for oil for 2025?
So right now, we see the market trading pretty much between 70 and $80 a barrel for 2025. Probably somewhere around 75, $77 per barrel on average,
Hmm.
thereabouts for this year. And that's for Brent. But there, again, this uncertainty is really high, David. if China is able to pull off, a recovery, if they're able to deploy fiscal in a really meaningful way and address their liquidity trap, that could, that could be a game changer and that could boost demand. They're big consumers of petchems, petrochemicals. So to the extent that consumers buy more consumer products that use more petrochemicals like plastics and that sort of thing, that could be a meaningful addition to demand. But otherwise,
So basically, you're kind of flat for the rest of the year is what your outlook is. Are you any shocks to the system that we should at least be looking out for either bearishness, which I guess we talked about in some way, but also bullishness?
mhm. Yeah. So, we're going in, or we were going into this year with a slight downward bias just from, the way the market was trading. The what I mentioned earlier, with OPEC Plus withholding that almost 6 million barrels a day off the market, um, that leaves you very uh, exposed if you do get a demand shock or a supply shock. Um, you lose a significant amount of production somewhere in oil markets, and inventories have been falling. You're in this backwardated market because inventories are going lower, and then you get a shock, and you're drawing inventories even harder. Prices will spike, right, to the upside. I think there's a limit on the downside. I saw some commentary. There was a lot of downside protection being purchased toward the end of last year in the options markets in oil, and that was you don't know who was putting it on, like if it was producers or if it was investors, but people are still lining up and taking exposure to be paid out if the market goes below 65 in Brent, the front of the curve. So I don't think I think there's a very low likelihood of that. I think once it becomes apparent that inventories are being drawn down and that that production wedge is going to take at least 2 to 3 months to, the surplus capacity that OPEC Plus has is going to take maybe 3 months to get into the market. You have a period where you could get some pretty high price spikes, as it were.
I wonder whether or not the oil market is pricing in or reacting to Middle East news at all right now. Take a look at my screen here. I'll share with you an article from CBS dated 2 days ago. U.S. strikes
Mhm.
Houthi targets in Yemen after American warships were attacked. So the United States military said on Tuesday that its forces had conducted multiple precision strikes that hit Houthi targets in Yemen's capital. This came a week after the Israelis struck Yemen as well. The targets have been used by the Iran-backed rebels used to attack American warships and commercial vessels. The attacks began on Monday and continued on Tuesday. A video shared by the command shows planes taking off and rockets being launched from a ship. Escalations in the region potentially could have disastrous impacts on the energy markets, could they not? I mean, I like asking you about um, these issues because not only are you an energy analyst, but you're also a veteran of the U.S. Navy, so you're well
Yeah.
positioned to analyze what actually is happening right now. Any impact whatsoever on the energy markets, or is this just noise?
It's not noise, but I think it's marginal at best for right now. Unless we see some of that Chinese gear, or as they say over here in England, that kit
Mm.
being put to use, the targeting and the launching kit that was supplied by China to the Houthis. That it's not going to change a lot. It's going to elicit that kind of response that you have here, where you're going to send your jets in to take out where they believe the missiles were fired from, and the drones. But most of the shipping, with the exception of China shipping, is avoiding the Red Sea. So where a lot of that activity is occurring, um, down at the bottom of the Red Sea in the Bab el Mandeb Strait,
Yeah.
um, most of that is being avoided to begin with. So you're rerouting around Africa, or if you can, avoid entirely, sending it, you know, up into the Med if you can from elsewhere. So yeah, I don't think it's that big a deal. The really big deal is if you start seeing, you know, um, missiles being fired on ships transiting the Strait of Hormuz in the Arab Gulf.
Yeah,
Then it becomes really
why haven't the Houthis done that yet? I mean, they don't need to blockade the Strait of Hormuz, which is a major choke point for oil exports, by the way, for the audience watching. They don't have to blockade it with ships, but they could shoot ships entering and exiting with missiles, right? Why hasn't
yeah,
that route been taken yet?
because that passage, the Strait of Hormuz, is critical to the Iranians to
Mm,
get their oil out of the Gulf and over to
I
China.
see. I see. They could just target non-Iranian or I guess unfriendly ships. Um,
They could, and in fact, a Chinese ship was mistakenly attacked by the Houthis, and
okay.
there's no fail-safe out there. So I don't think, and the Iran is arming the Houthis, so they're not going to want their arms turned against them or their their transit point there.
What tools does Trump and ultimately the U.S. military have at their disposal to either broker more peace in the Middle East come Inauguration Day, or perhaps by way of force encourage both parties to participate in more ceasefires?
I think he's firstly focused on he said he wants to bring the war in Ukraine to an end. We'll see how that goes. In the Middle East, he his administration, favored including the Arabs and the Israelis in these Abraham Accords.
Hmm.
I would imagine they would still want to see something like that. That you have this combined, force, dedicated to dismantling Iran's capacity to, wage war on them. They've made a pretty significant dent in that to date. And now the fear, among some of the analysts that I read, is that Iran might feel really desperate and, go all in on ramping up their capacity to launch a nuclear weapon. So I think people are very concerned about that right now. Given that Iran has been delivered a lot of, serious body blows to their ability to wage war.
Going back to the bearish bullish outlook of oil, do you agree with the theory that should Trump be successful in brokering more peace, either through diplomatic means or through force in Ukraine and in the Middle East, that is bearish for oil?
No, I don't think it is. I think if you can get a resumption of trade and commerce and business going, both in Eastern Europe and in the Gulf regions, that would be all good. People would stop avoiding passage through the Red Sea, either up toward the Med or down into the Indian Ocean. So I think that would actually be somewhat bullish for oil. Things could get
Interesting.
back to normal. People could, ship goods, drive cars.
So you don't think that oil at $74 is currently pricing in a geopolitical risk premium of war, and that premium could be, could go away if there's less war, if that's not what's happening right now in the markets?
No, I don't think
Okay.
so. We saw some of that premium leave the market, but I mean, I think after the Israelis attacked Iran's proxies and Iran itself,
Yeah.
and pretty much dismantled their ability to wage war. A lot of that fear came out of the market.
Okay, well, what about on the China-US front? You brought this up earlier. You mentioned how um, tariffs may have a limiting impact on China. Well, first of all, why is that? You also outlined several economic indicators, like a slowing PMI, for example, that may indicate a slowdown in the Chinese economy. Why would they not be affected more by the tariffs than the U.S. side?
Because they don't. I mean, they ship, a lot of important stuff to the U.S., but in overall, in the aggregate, it's trivial for all intents and purposes. The U.S. and China do not do, the lion's share of world trade with each other. Um, so they did more when Trump was president the first time, and that's just, people have been moving their supply chains, finding other sources of supply, and that's going to continue. Um, so I think China's big problem right now is that their domestic demand is just absolutely um, moribund. Consumers don't want to spend; they continue to save, and the only outlet that China has is exports for its excess capacity because they're not consuming it at home.
Yeah.
And all the places where they'd normally look to put that excess capacity into, like Latin America and Europe, they're telling them no. You don't have unlimited access to our market. You're not going to force us to deindustrialize to allow you to unload all of that capacity in Europe or in Brazil or whatever the case may be. I mean, those states are all taking action to limit the amount of trade that's being done with China.
One of the concerns I remember from the last Trump administration was that tariffs on China or a trade war overall with China would lead to a hot war. That didn't happen. Um, could this time be different? Are the stakes higher this time around?
So that's a good question because I think you could make an argument that they are higher. The limiting the access to the high tech stuff like the machines that build the chips and the access to the really really high speed state of the art chips. Every year that you miss out on that, you miss another cycle in that chip industry, and the ability to do more on a smaller wafer. At some point, the longer that goes on, the more behind the curve you're going to be, given
Mm.
Moore's law and all that sort of thing. You get a doubling of capacity and output on those chips every 2 years or so. So, um, yeah, if they come to the conclusion that, they're being cut off, and if this goes on for another 3 or 4 years, the literal chip choke becomes effective. They might just, you know, start, becoming more assertive and more aggressive to regain access to those chips.
So it's not really an issue of tariffs, broad-based tariffs. It's really a chips issue, is what you're saying.
Yeah.
Okay.
And the
Fun.
tech, getting access to the tech that continues to evolve.
Well, I mean, neither side has an incentive to escalate this. What are some of the controls that are set in place to prevent this worst case scenario that I've described?
The instinct for self-preservation.
Okay, fair
Um,
enough.
I don't know. I mean, that we're in a realm that's, way beyond my ability to forecast outcomes in.
I understand.
I
Well, are you concerned about the the naval strength of the Chinese right now? They've been building a lot more ships. That the growth of their navy has been unprecedented. Do
yeah.
numbers really tell the whole story, though, Bob?
Well, there's a couple of things there. They've done a remarkable job. I think, by number count alone, they have the largest navy in the world, or they're approaching that point. A lot of it is not what they call blue water navy. They're getting to the point
Mm.
where they can send fleets out into the high seas around the world, but they're not entirely there yet. The other thing is that, I mean, a lot of this has happened over the past 20 or 30 years. This has just been a massive buildup of capacity to wage war. But there has been little institutional knowledge built in actually waging war at sea in China. And, that's where the ultimate test is. The U.S. is just war weary right now. And, they've got too much experience waging war in the U.S.
Yeah.
We'll see. It's one thing to have all that hardware. It's another thing to be able to use it effectively.
Finally, I want to bring up a piece of news that affects the Trump administration. This came in from one quoting the Wall Street Journal here. Before Trump takes office, Biden to ban drilling in some coastal waters. The move will be difficult for the incoming administration to undo. So here's the story here. The decree, which could come as soon as next week, is expected to invoke the 1953 Outer Continental Shelf Lands Act, which gives the president wide latitude to withdraw from consideration currently unleashed lands in federal offshore waters, according to people familiar with the White House. The law has been invoked a handful of times. It doesn't include a procedure for a new president to unlock actions by a predecessor. Basically, what President Biden here is expected to ban oil and gas drilling in certain federal waters. Is this possible in the next 17 days before inauguration? And is this going to put a big dent on Trump's energy plans?
Entirely possible. I mean, he's just got to sign the order. But most of the
Why would he
supply
do this?
increases.
You know,
Uh,
it's 2 weeks
you
left.
know, I don't know. You know, the I think the Biden administration has been very faithful to its pledges to try to reduce oil and gas consumption. This looks like it's part of it, but that those properties those areas that are being hived off and not allowed to be developed, it's not a lot of oil, and it's not where the greatest amount of drilling is being done. The huge surges in output are coming in the shales, and that's going to continue to be the case. And some conventional. You've got deep water in the U.S. Gulf. You've got deep water off the coast of Latin America and Guyana. You've got off the coast of Africa. They're still getting a lot of capex in those areas.
Well, I mean, is it fair to say that the oil industry overall has been, I don't know about the word supportive, but happy about Biden's policies, given that his policies have managed to keep oil prices high because of some of these
Yeah,
restrictions?
I think it's a bit of a stretch. The
Yeah.
fact is that the Biden administration was in office during the biggest surge in oil production in the history of the U.S. We went
Yes.
above 13.5 million barrels a day. Um, and that was with the Biden administration not fully supporting that development and, putting a throttle on LNG development, to ship gas over, which is going to become more important now that gas is not flowing across Ukraine. Russian gas is no longer flowing across Ukraine into Eastern Europe. So the demand for that LNG is going to be high. It's one of the reasons you saw such a huge spike in nat gas, which came off today. I don't know if you saw that, but that was, it
Yeah.
was up 16% one day last week, and then today it was down 8%. That's breathtaking, man.
Yeah, okay, yeah, that's a good point. Bob, let's wrap it up here. Very good. Thank you very much for your insights. Where can we learn more from your work and read from your research now?
Sure. We're at ryancommodityinsights.com.
Yes.
And you can have a poke around the website and request a free trial of the research, see if you like it, and be happy to oblige if you do.
All right. We'll put the link down below, so make sure to check out Ryan Commodity Insights down below. Congratulations again on your venture, and Happy New Year. Take care.
Thank you, David. All the
Thank
best
you.
to you.
Thank you. We'll have you back again soon for energy updates. Thank you again for watching. Don't forget to like and subscribe.